If you're an investor into the electric vehicle market, obviously everyone knows about Tesla. They have been the pioneers, and until this year they have still been the one car manufacturer that has produced the most electric vehicle cars basically. Now going into, you can see that actually that BYD is really closing in on Tesla. So next year it's probable, I'm not 100% sure, but it's possible that BYD might go ahead of Tesla. And I would at least expect that by latest 2026 BYD will definitely be ahead of Tesla in terms of number of cars sold. But again, it's not only about numbers, it's also about let's say the sales numbers, like the gross margin, and BYD is selling cheaper cars. So in the you would argue that Tesla is more impressive in that sense, that they have these kind of big numbers despite the price of the car. So BYDs, you can always find them for like at least 20 to 40% cheaper than Teslas, and that's obviously one of the reasons why they have increased their sales so much. So if you remove BYD from this chart, and you would have something like this, and yeah, this is in my opinion more interesting, and you can see that Tesla also again is kind of losing market share, but that's to be counted with. I mean, no one would expect Tesla to have that market share of like above 75% that they had in the early, let's say, first 5-6 years in the electric vehicles. So at some point people will catch up, and it's fully realistic, but that's not a problem, because you can see that Tesla has gone from 500,000 cars in 2020, which was in itself very impressive, to 1.8 million this year. And I'm kind of projecting that they would be anywhere about, let's say, most likely 2.2 to 2.3 million at least, I would say. I mean, heck, even if it's 2.1 million, it's still like, yeah, basically 4 or 5x compared to 2020, which is good. Now the interesting part here is that you can see that the white color there, which represents Li Auto, and Li Auto is a very interesting company because they have they are basically not a fully electric company. They are still selling mostly like 95% PHEVs, so hybrids, plug-in hybrids. There's problems with them and also some benefits, but I mean, they have just launched their new like fully electric, the first fully electric cars. This is like this kind of, I don't know, I would say competition to the Volkswagen ID Bus, I guess. Yeah, so interesting first electric car to go into the market, but again, yeah, they are at least getting in there. And so anyways, you can see that Li Auto is increasing their sales by quite a bit. I mean, they had gone from 30,000 or so to just below 400,000 in 3-4 years, which is amazing. And it's extra amazing because it makes the other two companies here, like Xpeng and Li, they look like kinda so and so. And then you actually have a look at NIO's numbers, you can see that they have basically 4x their sales in 4 years, which it in itself is basically like absolutely amazing job from the company. But again, Li Auto just makes those numbers to look like pennies in that sense. But anyway, so you can see that this is the 4 interesting companies in my opinion. Tesla is gonna be in the lead even next year in my opinion. Now, I don't expect Tesla's valuation to have a, let's say, a huge change that it could have a couple of years ago. You know, you could like basically, if you have invested back in 2019 and 20, you would have at the minimum 10x your money, maybe 20x your money. So I don't expect a company that Tesla is today. I mean, look at this, the market cap is at 750 billion US dollar. So if the market cap would double from here, we are at 1.5 trillion. We're getting close to like the biggest fish out there. Like I'm talking about Apple, Microsoft, and Amazon, and those kind of companies. So I don't expect like Tesla to be anywhere near as good a stock in that sense compared to the previous 4 years. And this is mostly based on all the segments, which is basically cars and energy. But you know that Tesla has been active in the let's say the robotics and this kind of products that will replace human workers, and yeah, with that comes a huge opportunity. But we look into that into the future. For now, we are looking at the mostly like the traditional business for Tesla, which is mostly the electric vehicles. We can also see in this number here in the price to sales ratio that Tesla is clearly the most expensive of those 4 companies. I mean, yeah, quite a bit. And NIO in this segment is the cheapest one by far. And yeah, so have that in regards when you think, like, in my opinion, that most likely these 3 Chinese companies are kind of a bit undervalued, or quite a bit, in my opinion, in that sense, at least in price to sales ratio. And you can see that the market cap of those companies, like at 10, 14 and 35, it's peanuts compared to Tesla, especially if you think about it. Like, I mean, you look at the chart here. So this year Tesla sold maybe 11 times the number of cars that NIO sold, right? And you look at the market cap and you can see that Tesla is sitting at 750 and NIO at 15. So if you take 11 times 14 billion, that's what, I don't know, 150 billion or so, 160 billion. So if NIO would be valued on the same level as Tesla in terms of price to sales ratio, yeah, or sorry, in terms of number of call market cap in relation to the number of cars sold, you could see that Tesla would be definitely, NIO would be definitely much cheaper still. And that's basically what the price to sales ratio says, that yeah, the Chinese ones are a bit cheaper. Obviously you cannot just look at that only based on these numbers. You know that Tesla is the market leader, they have clearly the best margins, and we can see it here. Like, so this is their revenue, Tesla way out there compared to other 3. And then you look at the gross profit again, like Tesla is in a whole different level, and Li Auto is starting to get pacing up there. You can see that, yeah, so leaving NIO and Xpeng in the dust in that sense. And then we can see that the R&D expenses, Tesla is obviously again in the league of their own, but it's like this 3 billion in R&D gives them this kind of lead in the revenue and in the gross profit. So they are a very efficient company, Tesla, as well. And NIO is not, like, yeah, these numbers don't look good for NIO in that sense. So if you look at the price to sales ratio, we see that NIO is the cheapest. But then if you look at the R&D expenses, yeah, this is actually a bad look for NIO. But again, you know, it's not only apples to apples. In terms of NIO, they have something like, you know, I don't know, like 2,000, as you can see here, 2,300 battery swap stations, which no other car company has. And this is like an expensive infrastructure, and there's a whole lot of batteries sitting in these 2,300 swap stations. I think the newest generation can hold up to 21 batteries, and these go anywhere from 75 kilowatt hours to soon 150 kilowatt hours per battery. So we are talking, like, I mean, if you take, let's say, 100 kilowatt per battery and times 21, that's around 2 megawatts of battery sitting in each swap station. And NIO has 2,300 of those, and expanding as well. And think about it this way, these are like, these power stations could also be basically you balancing up the power grid. And basically once there's if NIO is sure that they have enough batteries in the swap station that are not going to be used in the closest, let's say, couple of hours, and then you could definitely sell some of the battery power into the grid again if that's needed. And this is something that NIO is already doing in some areas, and you can definitely make some huge margins there. So although the upfront cost is quite a bit, like you have to pay a lot to build these stations, it's a lot of infrastructure and capital expenditure, but the benefits, if the company survives the, let's say, couple of 3-4 years ahead, is huge, because not only will they make money on the swapping, they will also make money on actually just balancing the grids, which is amazing. So yeah, NIO's R&D budget could be explained, but you know, I mean, they are not only like Xpeng doing electric cars. I mean, they are doing power grids and yeah, power swap stations. And in addition to that, if you go to Xpeng webpage, you can see that they have 4 models. But if you go to the same equivalent webpage on NIO, they have something like 7, 8, 9, 10 models. And in terms of Li Auto, they only have this is their first electric car, and this car is gonna sell quite a bit, but this is not a sedan, and I mean, not a whole lot of people will buy these kind of cars. You need to have at least a few sedans, 3-4 sedans or hatchbacks to compete in this market. And the question would be to Li Auto in that case, then will we see this kind of research and development expense ticking even more up? And you can kind of already see it. So something is happening in Li Auto, and I would expect that obviously they are planning to introduce new fully electric vehicles to the market in the coming year and coming couple of years. So this explains also why Li Auto, why they have been so lean and why they probably will need to invest more money in the coming few years. You can see also on cash on hand, again, Tesla in league of their own, and then NIO is, I mean, they're in kind of bad spot, but then in the last 3-4 months, they have definitely been diluting the stock and getting some investments from Saudi Arabia and other places, and yeah, you can see that the cash position is basically up to 6 billion again, which is really good. So I don't see any danger for NIO at all, especially considering that you can see here that on the Q3 report, the gross profit was at least turning again upwards, and gross margin going from 1 and 1.5% in the previous 2 quarters to 8%. And we know that the cost of the battery manufacturing is coming down, so the lithium carbonate raw material in the battery is going definitely, like, it's been going down quite a bit. So here we can see the lithium carbonate price, and you can see like we've gone from, like, I don't know, the peaks were a couple of years ago to last year, and you can see that 600,000, and we are going basically down to the levels of 2021 before the peak. So this will definitely help to improve the margins for NIO and obviously the rest of the companies. And I mean, you would say that part of the gross margin decrease for NIO, going from, like, let's say 17% at the highest year in Q4 2021, is due to the increase with the lithium price. You can see here, like, you know, it's been basically ever since January, let's say 2022, it's been like in these high elevated levels. So this definitely affected the margins for NIO and other car companies as well. But also the other part is you know, the price pressure, and you could see that going from Q2 2021 and let's say the couple of few quarters upwards up until, let's say, early 2022, you would have to have waited like 6 months or even 1 year to get your hands on a brand new electric car on the market, because people were like buying electric cars to the left, right and center. And now in the past year, again, the queues have been going down and people don't have enough money to invest into cars, and yeah, the consumer is not strong enough right now compared to 18 to 24 months ago. But again, I think the worst is past us in terms of consumer weakness. So going forwards, we will definitely see also like less pressure on the pricing, I think, especially considering that, I mean, look at this, like the growth from 2022, there were like 10 million sold electric cars globally, and we went to almost 14 million this year in 2023 then, and it's a quite strong increase in the electric vehicle market share in the couple of, let's say, in the past 5 to 7 years, and we are still only at 18% global market share. So yeah, there's definitely very like many years left in the growth in that sense. So I don't see why the price pressure that we've seen in the past 18 months will be here for all the time. So at some point the price pressure will ease off and the gross margin will improve, also due to the price of the lithium carbonate as we spoke about, and also just the improved gross margin from the volumes going up. I mean, NIO was selling like 20,000 cars in Q1 2021, and in the last couple of quarters they passed 50,000. So all these numbers will help NIO to increase the gross margin. So I'm not so scared about the cash position that they have right now. And I think like NIO's 6 billion on hand is probably gonna last them. Maybe that was basically the last of the illusions we saw these past couple of months. So going back to this chart again, you can see that my expectation is that Tesla will increase by 500,000 next year. NIO will increase by almost 50%, and Li Auto maybe 60 to 65%, and then for Xpeng also maybe same numbers as NIO. So I think like most likely Tesla will, in the grand scheme of things, lose market share, and we can see that the dark green bar, which was at around 75 to 80% in 2020, now we are going, I don't know, let's say at 60, 68, 69%. So yeah, Tesla is definitely losing market share, and especially like if you put also if you add BYD into the picture, you can definitely see how Tesla is losing market share. But that kind of doesn't matter, because all that matters is basically the numbers for Tesla. Although the market share is going down, as we can see here, that the total market is increasing faster than Tesla is losing market share. So that's not a problem. I mean, it's normal. No company has the full right to sell any product at any kind of monopolistic position. So I like, this is not coming from a bad perspective for me. I just think this is just the nature of BYD operating at the lower segment, like lower prices, and obviously there's higher volumes down there. And we know that Tesla will also introduce the Model 2 or whatever it's going to be called soon, maybe in the next year or two. So they definitely have a plan for going, like, I mean, if the growth is slowing down a bit, with the new Model 2 coming to the market, probably they will increase their market share by quite a bit. So finally, to finalize the video, what's my point? What are my ideas going into this year? I think that if you invest in all of these companies for the long run, I think you should be in a good spot. Now the danger with Xpeng is the cash position. They will probably need to dilute some money at some point, especially if they are gonna compete. They only have, as we saw, like 3 to 4 models, and that's not gonna be enough for competition with these with these companies. And especially, again, you have to remember that I only picked these 4 companies. You have Geely out there, you have all the German companies, you have the Japanese like Hyundai and Kia. So there's definitely a few other companies that I haven't mentioned. So if Xpeng needs to survive here, they definitely need to, most likely are gonna have to have some dilution and taking in some investment money. But again, I still believe in Xpeng as well. I think they have good products. People seem to be happy with them, and they are one of the pioneers in the casting segment. So in casting the rear and the front end of the car to reduce the number of parts and basically increase the margins even more. And they're basically second to Tesla only in that segment. So I don't think Xpeng is in a bad position. It's just, they most likely will have to have some kind of dilution. And then for Li Auto, they are just going from really, like, I mean, look at this, 30,000 to expected probably around 600,000 2024. This company is growing really fast, and the only problem there is that they are still only selling basically plug-in hybrids. So and at some point they need to start to show fully electric cars and sedans as well. So, and then you have NIO, and I think, I mean, most people probably expected in 2022 that NIO would have sold by this 2023 maybe above 250,000 cars. And this is not like investor stocking. This is basically what the management has been saying for long time now. And honestly, even last year in 2023 in the summer, some of the higher ups in NIO were clearly confident in like selling 240,000 cars in 2023, which they fall very short of with 160,000. But again, I mean, that's just expectation management, which is NIO is very bad at. But if in the grand scheme, look at this, from 43,000 to 160,000, I think we are confident that 235,000 cars next year, or sorry, in 2024. So, and with that comes, as we spoke, like better margins. I think definitely NIO is a really good candidate. Like if they, I mean, look at the price to sales, it's just, it just doesn't make sense. And as soon as the grander market starts to move upwards, I think NIO will definitely be quite a nice pick. But again, this is not investing advice, and thank you for watching the video, and please subscribe, and see you in the next one.